Hello everyone, welcome to the webinar. We'll just start in a minute or so. So hold on. All right, we'll go ahead and get started. Hello everyone, this is Aparna Dalal from the ILO's Impact Insurance Facility, and I would like to welcome all of you to the webinar hosted by the Impact Insurance Facility and FSD Africa. Today we will talk about how to make change happen within insurers. We have an excellent panel of presenters who will share their experiences as well as lessons that they are learning from an ongoing change management project in sub-Saharan Africa. So before we get started, let me just quickly introduce why we are working on this topic in the first place. So what we've learned is that to effectively serve the low-income market, insurers as well as distributors need to innovate and develop client-centric products and processes that are both cost-effective and viable, but also provide value to the low-income market. And this is often rarely possible without some substantial changes to business models, internal structures, and operating procedures. So the ILO and FSDA started this partnership in 2015, and we've actually partnered with 6 practitioners, both insurers and distributors, that are trying to implement these changes at the organizational, technological or operational levels to be able to more effectively prepare themselves to serve low-income and mass markets in the future. So in this webinar, we are excited to have 2 partners, AXA Mansard and SUNU Assurances. So from AXA Mansard, we had Odeniyi, who will present some of the activities and learnings that AXA Mansard has experienced as they have started this change management process. And similarly, Gildas and Zuba from SUNU Assurances will present his experiences as well. In addition, we have Paul Musoke from FSDA Africa, who will talk a little bit about the motivation behind our partnership and the need for financial institutions to really think strategically about what kind of changes they need to implement and to go through a systematic process to be able to get to their desired objectives. We'll talk a little bit more about this in the webinar. So we'll have each of the 3 panelists present, and then at the end of the webinar, we will have some time for a Q&A session. Yost, you can go to the next slide, please. So as you see in the webinar system, so in your panel, you have a section to enter questions. So I would really encourage you to ask any questions that you may have as the speakers are speaking. So you can just enter them in the panel, and then we will try to address as many as we can at the end of the webinar, or if there are some clarifying questions that we think it makes sense for the speakers to respond to, We'll even try to do that during the webinar. So please do, if you have any questions or comments, please do enter them through the panel. Okay, so now I will turn over to Paul Musoke. So Paul will present, will talk a little bit more about the motivation behind our partnership, as well as present FSDA's perspective on change management more broadly. So Paul, I'll hand it over to you.
Thank you, Aparna, and it's a pleasure for me to be part of this panel and partnering with the ILO. So what I'm going to talk about today is why the need for change management, and then I'll touch on the effective change management and how one can achieve it from my experience running various change management initiatives across the continent. And then I'll touch on the ILO Impact Insurance Change Management Program that we are running with the ILO. Used, can you change slides? I don't think I have control. Okay, thank you. Yeah, so basically why the need for change. And from FSD Africa's point of view is that one, we see the financial sector as critical to inclusive economic development. If the financial sector is not operating effectively, then economic growth that's meaningful won't really be happening. And we find that Sub-Saharan Africa is actually faced with lots of difficulties around the real economy in terms of touching people's lives and employment. On the other side as well, you find that Sub-Saharan Africa is also a leading in terms of disruptive trends in the financial sector, and mobile technology consumption and adoption is actually growing fastest within Africa. What this means is that there's more pressure on FSPs and regulators to quickly adapt new business models, and we find the large financial sector players who have the scale and the mandate to have a big impact are not actually achieving that. Just broadly, if you look at FSPs within the financial sector, whether it's insurance, whether it's banking, whatever it is, we find that there are sort of three broader categories that we look at as FSD Africa. One are those who are actually existing, established FSPs, but are struggling to sustain profitability because the environment is changing and the markets are quite mature. Then you find the mid-tier FSPs who are trying to drive growth by diversifying and going into new segments. And then on the other side, you have telcos also who are seeking to move away from airtime kind of revenues and looking for other revenues. Next slide. Yeah, so in light of what I've said around the environment within the financial sector, we actually find that repurposing established FSPs to address unserved markets requires significant organizational change. On the other side as well, for new entrants, we find that as they come into the market with new ideas and they start growing, again, it requires managing that change to an environment that's really quite fluid within the financial sector across the continent. So we believe that leadership development is critical to support that change. Training and technical services will be critical support services to support financial sector to really go through the change it needs to go through. We also believe that technical assistance to support processes of innovation and organizational change are also going to be key to capitalizing opportunities within underserved markets at the moment. And FSDA, as a time-bound program, basically we look at institutions where we can demonstrate impact, and that really comes through institutions which are looking at reaching scale and can enjoy economies of scale to be able to pass on benefits to the poorer section of our society. Can we? Next slide. Okay. So for my experiences in terms of what we can do or to make change more effective, just to say FSD is currently running 10 change management programs across Africa, 4 in banks, and then 5 with insurance, 6 with insurance with the ILO, and then a fintech that we're supporting. So we've been doing this for the last 2.5 years, and we've learned a couple of things as we've been supporting institutions to go through these changes. And key to that is for change to be effective, we think visionary leadership is critical. You need a champion, a mobilizer, a risk taker who initiates the change. And what we've seen is that the higher the champion is in the organization, the more effective this change happens. Another area to look at is institutions need to explore and commit the right ideas. What I mean here is that strategic planning processes need to challenge and explore and give room to risky business cases. What we find usually is that the well-trodden knowledge and know-how really drive strategic thinking, and institutions tend to remain exactly the same as they've been before. So we think that where we find it's most effective is where they support and allow for more risky kind of changes within the strategy development process. We also think that you need to set a clear strategy for the change capability. And that means that make the project team accountable for the role in change management, not just implementation, the team that's implementing the project, but also make them accountable for the changes that are happening within the organization. But on the other side as well, create a central structure within the organization to support change centrally. Because change within it, even if it's happening in a department, it's impacting everybody else within the organization. So there has to be a centralized kind of support system for the change to happen. The other thing that we discovered is that ideas need to be developed into sustainable designs. And what we're saying here is that new business models require new processes and approaches. There's always the tendency to use existing processes and approaches to actually support new business ideas. And that usually does not work. It usually leads to a failure of these initiatives over time. Okay. And then the other thing is about enabling the organization through the implementation process. And here we're looking at stakeholder engagement, which is critical to sustain commitment. Usually these kind of new changes, it takes time for people to actually take to them. So it requires quite a bit of commitment and engagement from the leadership, but also enable change impact analysis to be driven by the project team as well. So they need to stop and look and say, how are we actually impacting the change that we're supposed to be impacting to be able to drive it forward? Okay. The other one that we see comes up as a problem is really about internal capabilities and the perceived gaps that that might come in there. And there are two sides to this. Sometimes organizations overestimate their ability internally to implement this change. Sometimes they underestimate this ability. And if they get it wrong, it always comes back to bite them, that they are not planned for resources effectively. So it's actually important to assess critically what your resources are and how they can support this change, where is the gap, and bring in the extra support you need beforehand before you get into it. Okay. The other area that we see is that you need to sustain change on a continuous basis. And this is really sustained visibility at C-level support for new ventures. One needs to give time to these projects to fail, because they always do fail. But the important thing is, do you learn from the failure and adjust and then keep going on? When you actually get successful results, then focus on those and try to scale them up going forward. Okay. And let's celebrate the successes. It's critical that successes are celebrated as we're implementing these changes. It keeps the momentum going. Okay. On the other side, also, we think managing available funds and prioritizing available funds. So what we've found usually with the change projects we're running is that even where you have a large budget to support a new initiative, in many cases, the funding actually goes towards supporting existing capabilities within the organization. So it's trying to tweak what is existing to support the new change, instead of actually focusing more resources towards what is required to support the change. And this tends to delay the process and how basically the change happens. Other area we also find is professional services. Now, these ones are usually important for you to implement something new in an organization, because you don't really have the skills. but many institutions do not know how to buy professional services. And the problem is that if they get the wrong professional services in to support them, usually they end up doing it wrong. And then it becomes a spiral in terms of a blame game that no, either it's the project or it's the idea, where does actually the problem came from, how to buy these services in to support the change. So it's critical that institutions build that capacity to buy in the right services that they need to support their change. Next slide. Yeah. And then related to the previous point, but around assistance. Now there are a couple of organizations out there who either provide funding or provide technical assistance like FSDA Africa, or there are organizations which provide more technical assistance like the ILO. But we find that in some cases, especially smaller institutions, struggle to actually identify the right partners to work with who can come in and assist them, and they don't get the right support to drive the change. What we find is that the most successful change initiatives, at least on the continent, have institutions which have learned how to leverage this support and assistance and technical assistance that comes in to really help them to drive these things to scale. So it's a skill that one needs to develop as you are getting into the change process. And lastly, and I think importantly as well, is that executive coaching also can play a big role in supporting the change process. So basically, we find that it supports ongoing processes. It actually works with the people within the project and supports them as things are happening. It enables the projects to do impact analysis on a regular basis, supports the learning and adjustment process, and also provides a safe place for the people involved in the project. Because once you're instituting something new in an organization, you're basically in a whirlwind of resistance, of doubt, of whatever. So usually coaching helps you to sort of gives you a space to think through all these things that you're dealing with on a regular basis, and we find it to be very effective. Can you go to the next slide? All right. So when I look at the ILO Impact Insurance Change Management Project, FSDA decided to be part of it for four reasons, really. One, we saw that it was a market building opportunity, which is quite at the core of what FSDA is trying to do. We all agree that there's a tremendous need for insurance to grow within Africa from a demand side, but also we find that from a supply side, there isn't a lot being offered, especially to the lower end of the market. And we think this is something that needs critical support if we're to help Africans manage risk more effectively going forward. It's a big missing piece, and we think it's a critical market building initiative that we're doing here. On the other side, it's also transformational. So it's actually changing business models within insurers and distributors to be more effective in providing value to a large number of low-income households. And then we find that it's anchored within the innovation partner strategies, so that whatever changes are happening within this program ultimately do spill over to the wider organization and lead to wider change and ultimately transforming these organizations. Of course, it targets the underserved, helping them to manage their risks more effectively. And we believe that eventually, if it actually becomes more widespread in terms of insurance access to the poor people, it have a bigger impact on other sectors like agriculture or health or other sectors as well, that it can stimulate growth in other sectors, which will impact the real economy and lives of the people that we're dealing with. And FSD Africa is a regional program. We focus on really doing things across the continent that can have impact. This program spans 5 countries. It's working with 6 insurers, probably 7 soon. The idea of a community of practice, which brings in more people together, even beyond those who are participating in this particular program. And also the process of disseminating information about the learnings from this project, which will stimulate others to be able to do or copy the kind of things that the partners on this program are actually doing. Can you go to the next slide? Okay. Just winding up as well, just a brief chat from our point of view from a macro level. What we see really as the key goals that are coming or should come out of this change management program with the ILO is really spurring innovation and building capacity within leading insurance players in Sub-Saharan Africa. Also working with partners to scale innovations quickly and also achieve sustainability, which is a critical aspect of everything that we do. Because we are time bound as a program, FSD Africa. When you pull out, you want to leave programs that are actually sustainable and can run on their own. Okay? And then identifying organizational changes within selected partners that need to be addressed. Critical as well, it is focusing on improving customer value, but on the other side as well, shareholder value. Because if shareholder value is not improving, then they won't support this program. But also on the customer side, if the program is not adding value to them, then they will not be using it and everything will follow. Overall, we're looking at 1 million MSMEs and low-income persons being reached with microinsurance. And out of all this, a toolkit will be developed that will be available for other players to actually use it as a starting point to implement similar initiatives. And then, as usual with the donor organizations, demonstration cases to really show how this can be done and add value to our brothers and sisters on the continent. Thank you very much.
Great. Thank you, Paul, for the very useful introduction. So before I turn over to our two insurers, I just wanted to very briefly kind of set the context and give a slightly broader view of basically what we're trying to do within this change process. So the process that we're using involves 6 steps, broadly speaking. And we've adapted this process from the change management theory, and you'll see that a lot of the messages that we're trying to work and deliver with partners actually parallel what Paul just mentioned in terms of best practices for effective change management. So the first step in the process that we follow with partners is usually trying to identify the need for the change, and then as a result of that identify, okay, what is the desired future that we are aiming towards. So is the need for change coming from a problem or an opportunity? Is there, for example, is there greater competition in the market, or is there an untapped segment that we want to reach? So we go through a workshop and a diagnostic process with the organization, and what we found is actually one of the main, the most kind of interesting takeaways from this workshop is really trying to understand who the low-income market really is, because often this is something that has not been done in a very systematic way, perhaps, within the insurers. So we go through a diagnostic process with the organization to identify the motivation for the change, and then as a result to identify what our desired future is. And one important step in this process is to acknowledge where we are from in terms of the current state, and as well as talk about the gaps and the bottlenecks that are preventing the organization from achieving this desired future. So for example, if a desired future is to be the insurance of choice for the low-income market, providing client-centric products, and how do we get there? And that would be then the activities in the work plan that we create for the change management process itself. So once the objective is identified, we found that it is important to then go to step 2, which is to gain buy-in within the organization by firstly communicating the vision and also to create a sense of urgency. So this could be an urgency of a potential problem or of a potential opportunity. It could be framed either way. And we found, and this will be discussed by Omosolape and Gildas as well, that buy-in really operates at multiple levels. So you have executive buy-in or staff buy-in, which is important, or buy-in from partners, which could be critical for you. And since sometimes you might have buy-in, we've seen that we have buy-in for the overall strategy, but then when it comes to committing to individual steps or allocating resources, there may be challenges. And in these instances, having this overall objective and agreed, desired future is useful because that's what we can relate back to. Then the third step involves organizing for the change. So what we mean here is to set up the structure, the team that will actually drive the changes, and this, having change champions, as Paul mentioned, could be an effective strategy here. as well as thinking about a cross-functional team to manage the process has also been found to be effective within our partners. Then step 4 includes the actual implementation activities. And this is, creating the work plan, prioritizing activities, assigning responsibilities, and monitoring the changes. So the framework that we are using with partners has 4 implementation pillars. So one is customer value or customer centricity. The second is distribution and operations. The third is business case and risk management. And lastly is governance and people. So within each of these pillars, we set up activities that we need to conduct to both identify kind of what the changes are and then implement those changes. And then finally, steps 5 and 6 are, we can really think about these as activities that need to take place throughout the process. So they happen, across, like during the entire term of the project. So for step 5, it's important to communicate success, especially the short-term wins, to maintain support for the process. And this is because often when we start off with this project, we've discovered that the scope of the changes may be intimidating or quite far-reaching, and hence even after we go through a prioritization exercise, it's still important to continuously demonstrate progress to maintain buy-in and commitment towards the end objective that we are trying to reach. And then finally, in the last step is really we need to ensure that the changes are institutionalized, and this is really I think this is it's really important both for FSDA as well as the ILO to ensure that everything that we do is institutionalized within the organization's culture and structure and procedures so that they are sustained over the long run and not just for the term of our engagement. So having just kind of given that background, I will now turn over to Omosolape Odeniyi from AXA Mansard in Nigeria, and she will talk about some of the activities and learnings from these activities that AXA has been gathering as they've gone through this change process. So Omosolape, I'll hand it over to you now.
Thank you very much, Aparna. And I'd like to start by saying thank you for this opportunity to be part of the panelists today to share our key activities and the learning so far on this awesome journey that we're taking on. Let me also quickly add that I think Paul's presentation and your change management process that you have just taken gives a very good background to all we're going to be speaking with, because what we have done as an organization is work along those processes, and that's why we have seen the results we've seen so far, and which is keeping us focused in going forward. So my content is simply to share with you the activities we'll be carrying out and the learning that we have so far. So we can go to the next slide. On the key activities, next slide. I would crave your indulgence to go to the slide that has the micro-insure description. I will start from there and then we'll go back here so that I could just quickly paint the proper background, if you don't mind, just. Thank you so much. All right. First and foremost, and which is that's why I referred to Paul's presentation in terms of getting what he called professional, expertise or partnership. One of the things we've also been able to do here at AXA Mansard and at AXA Global is to have the expertise of micro-insure. Micro-insure is working with us currently, to design and, focus on the emerging customers. These are people that we, intend to target to create micro-insurance products that will, cover some of the risks that they are facing. So this relationship started back in 2015, and so far what we've been doing is working together. We have been partnering, and we have similar targets, and I will also share the results. So what we've been doing with Micro Ensure is that we are prospecting customers together. Right now, we have the partners that we're targeting are the microfinance banks and some affinity groups. We're prospecting. That means that AXA Mansard and Micro Ensure hand in hand are identifying this, targets of these target banks and channels, and then we're going together, to push our proposals and push, the solutions we think that we can offer to either their group members or what you call their customers. So in respect to this prospecting, we've had the need to sit down together to do a lot of product design and create a process as to how to go about this. Also, in terms of the operational setup, we agree on who manages what within the partnership. So where everybody brings their expertise. So for us, as the licensed underwriter, we manage all the underwriting. They manage claims in some regards, administration, and that also includes data management, as you can see. So this partnership has helped us in terms of increasing our knowledge of the customers within the microinsurance space and helping us to effectively target. So as I said earlier, for now we're focusing on the microfinance banks and the affinity groups. For now, what we have is a product which is on the previous slide where I will go back to. We have signed up with one MSB, and then we have discussions with more people in the line of our prospecting. I'll quickly touch on the product, and why this is relevant is also so that as an underwriter, we have been providing credit life to microfinance banks, but now the product we have is more enhanced and helping us focus on their customers also, which is creating more value for the microfinance banks and their customers. So this we see is working, and we will continue to do likewise. So this product is typically in the life and general business class, and the product benefits, cover the life, hospitalization, property, permanent disability, and there is an extension to having a cover for their family members in the case of death. Now, in the opt-in process for the credit life that you typically see, there is a compulsory opt-in. Once you take a loan from the microfinance bank, you are tied, and then this process comes in now. And then they're pushing the product benefit to them so that they can see the other things which they can gain from getting a loan from the microfinance bank. Whereby in the voluntary one, where this customer has a deposit in the microfinance bank and not a loan, the microfinance bank then target them with the relevant cover. They speak to them, and then the customer typically decides which cover he wants and signs on to be covered for such from such risk. So the distribution channel remains that we're speaking with the microfinance banks, we're targeting affinity groups. Some examples of the affinity groups: we'll be speaking to trade associations, we'll be speaking to workplace groups and cultural associations. We have a lot of this in Nigeria, and we're trying, to, with limited resources, target this group so that we can offer, our products to this large group. This is in terms of product focus and what we've been doing, and with the help of Micro Ensure as a partner, and we'll continue to do this. So we'll now go back to the slide that has our key activities with the internal activities. Next slide. Thank you very much. All right. In speaking to our key activities, just to refer again to our panel's presentation, we've had it's been an interesting journey, as if you allow me to say, and what we've seen as an organization is going through the process, we've been able to commit to focusing our resources, our strategy on targeting, people for microinsurance. And we, as an organization, refer to these people as emerging customer. So within the organization, we have the buy-in of the management. We have buy-in across different levels. So just because before I go into the internal activity, I'll quickly speak to some of the things that have happened internally. So we've had, in terms of having a structure, we've had the team with structure where we have a core team, the emerging customer team, which is with the core responsibility of designing products, designing, the process of reaching and strategizing how to reach the emerging customers with microinsurance products. We then also have a cross-functional team. Now the cross-functional team is made up of different people within the organization that their own core function relates to our drive to push microinsurance. So we have people in the life underwriting team, we have people in the property and casualty team, we have people in the claims team, we have people in the customer care team already being trained and developing to be able to speak specifically to these customers when we get them on board. And then we're working closely with the partnership team. The partnership team has the core responsibility of working with microfinance banks and all. So one of the things we typically also did as a team is, while we have such KPIs as number of customers, the partnership team has the KPIs in terms of the financial targets. So there's been an alignment, and this has been communicated across the organization, whereby even what we call our KPIs for the year has been signed on, and so everybody is focused and driven to meet this agreed performance indexes. So I will speak to the internal activities also in this line. Broadly, where all our activities are driven under three major things, and that is knowing our target customer and becoming more customer centric, and also being more agile and adaptable. This is very crucial. Just speaking to what Paul said, for us it is, it's not business as usual when it comes to microinsurance, because first, the customers, we need to know them. We cannot use our existing, knowledge of the traditional customers, whether for life or for motor or general business, and use that in targeting, customers for microinsurance. So the company has realized this, and we've done a lot of work in terms of getting to that. And that work started with the change management workshop that your team has come to conduct, with Lisa Morgan leading that workshop. And it was an eye-opener in terms of, it was enlightening. The things we thought we knew, were not the things, that were really applicable. And so the knowledge gap is being every day filled, because we're doing a lot of things to ensure that. So that also speaks also to a lot of market research activities that we're doing. There are desktop researches, and there are on the field, researches going on in helping us to understand the people we're trying, that we're targeting, so that we would not do a lot of what we call head knowledge, but we would right there in the field, know what they need and be able to design products that are relevant to them and not just general. So we're being more customer centric, and in being agile and adaptable. I've talked about how the project, there's a core team and then there is a cross-functional team. We are also developing a product approval process. We realized that there is a sense of urgency to this, unlike what we have for traditional insurance, and our relationship with our regulators. We realized that we need a different process for developing our products and getting approval, whether internally or externally with the regulators. So we're working, to ensure that we have a different and targeted product approval process for them. We've had ideation workshops, and this is also because we have different initiatives and projects happening in the company. Now, in this regard, like we said, that we have a buy-in of the entire organization, whether at senior management or cross-functional teams and at different levels. The company has a renewed drive at looking at the emerging customers and microinsurance as a whole. So we have seen interesting results in terms of people, different teams, sales teams and agents go out for meetings, and when the customers are trying to explain their new focus for the year, we then typically pitch to them that you could focus, you could have a microinsurance drive and reach more people, especially with our country, and we have a lot more people within this segment, in terms of our population size. So we have market research, ideation workshops. We have capacity building, initiative. That's also the training. We have the ILO market research training ongoing, and we also within the different projects we are focused on ensuring that we can target the emerging customers and have an alignment in showing what a microinsurance product can do within the different projects we are running. So there's one for the women, and then there's one for agri insurance. So within that space, we work with all the project teams, and we begin to focus on people that microinsurance might be very, very relevant to. Same for our partners. For telcos, we've had several sessions with the telco that we are partnering with, that's MTN. We're sitting and we're repositioning their product to see how we can further make it relevant. We have used the opportunity of this drive to go back to keep the conversation going and to keep the work going in targeting emerging customers. We've talked about banks and microfinance banks. We've had sessions, with them. We're having a partnership launch with BOSAC, it's an MSP here in Nigeria. We've had discussions with several others, and 2 banks also are key in our discussions who have similar drive to reach people within this space, and we have been able to show them that a microinsurance product might be able to deliver there. Lastly, I will speak to the payment aggregators or the payment partners, and this is very key because we realize that in the mix, what I mean by the mix is in the process or in trying to buy a product, we know that most times people think about payment last, and we see issues with that, and there are also regulatory confines that we're going through in Nigeria. So we're speaking with payment aggregators here, so that when we're proposing such products, we can thoroughly capture what the process and the flow will be, and so that we can get it right. So this is where we are, and this is a great drive for us to be able to cover our ideas and be able to push forth within the microinsurance space. Lastly, I will touch on our learning, and for now, there are very few, but for us, we think they are very key, and they have been able to propel us to keep going, and that there is a light at the end of the tunnel. So overall, there is an increased interest in emerging customers within the organization, and this is not just starting with AXA Mansard here in Nigeria. It is a global, interest from AXA in France, and we've had a lot of support from them, and that's where microinsure or partnering with microinsure started with. And so there is, typically there is learning shared across board. There is initiatives we can learn from. Partnering with ILO right here too has been very important and very helpful for us. We've not had to entirely fish in the dark. We've had people holding our hands as we go along. So it is no longer how will I put it? It is for us as an organization, talking about microinsurance is now not new. It is the norm that within every space we're looking at, we're thinking about reaching out to emerging customers and providing microinsurance products and solutions for them. So this has been very, very interesting for us. I will quickly add that this typically also has helped different teams when they go out, say the partnership team, when they go out to meet with their customers and prospecting customers, they have been able, to help them focus or, enlighten them on how capturing this target is very important and totally on the bedrock of, financial inclusion, going out of focusing on the everyday urban customer and how we can, really reach a little bit deeper and, increase our spread in providing financial solutions for these people. We talked about increased activities around promoting the financial inclusion within our several key sectors. To this regard, I would like to, talk about how even in our discussion internally, like I said, there are different initiatives going on, and we've been able to pinpoint where, extending such discussion and increasing our focus to the emerging customer has been very, very, interesting. So we are there. I don't think there's typically a day where a discussion is going on customers, which is not extended to think of, can we also, look at the emerging customers? Can we see what we can do for the emerging customers within the space? And this for us is very, very effective. Lastly, there's an increased need for progressive regulation within the emerging customer space or for microinsurance generally. What we've been able to do and that we're very positive about is championing these discussions with our regulators and different people. There are new regulation that was passed recently. We've been able to come up with a paper to the regulators showing them things they might be missing, by not, making the regulation or the guidelines more inclusive, And so we've been able to push such papers. We've been invited to join the Committee on Microinsurance at the Nigerian Insurance Association. Same for EFINA, that's the Enhancing Financial Innovation and Access organization. We've been invited. We're part of the Microinsurance Committee also. We're sitting in such places and we're, championing the discussions for progressive regulation, for how to look deeply, because we as an organization are, taking this very seriously and, and continuing in this drive. So we've been able to speak from a place of knowledge. We've been able to also speak from a place of experience, because these are things that we have tried. We've seen where the challenges are, and we're, trying to knock down the walls that we're seeing. So these for us are learnings so far, and we believe if we do more, stay within the process, continue to reach out for help and knowledge, we think we'll be able to, do better and really see significant progress in the financial inclusion agenda in Nigeria as a whole. Thank you very much.
Great, thank you, Solape. I would now like to turn over to Gildas and Zuba from SUNU Assurances B in Cote D'Ivoire to share their experiences and lessons. Gildas, over to you. We can't hear you. You might have to unmute yourself.
Can you hear me?
Yes, now it's fine. Please go ahead.
Can you hear me?
Yes, we can hear you now.
Officer of SUNU Assurances V in Ivory Coast. Concerning the change management for us, the first question we have to ask to answer is to know why we did it. First of all, we went through a significant size change in late 2015. Indeed, we were two insurance companies, life insurance companies, and we went through a merger takeover process, and we became some kind of new company with more than 115 staff plus interns, and we are now the leader in Francophone Africa on the life insurance market, and more especially in Ivory Coast. So this merger, through this merger, the two societies, the two companies had different cultures, different business models, and because of that, it became a real necessity for us to become a new insurance company. So that's the first reason, the significant size change we went through. The second reason why we had to change is the competition intensification in our traditional model. We are selling life insurance products to companies, corporates, to individuals, through banks, branches, and on those markets, the competition intensified a lot. The third reason why we decided to change, or why we had to change, is that all studies, even ILO studies, show that there are many opportunities that are created around us through medium classes, vulnerable populations, and all those stuff. And as Paul said just before, there is also a real strong disruptive trend through financial service providers, through mobile, through digitalization, and all those reasons. So there is a strong change in our environment, which explains why we have to change. And we also asked to ourselves a real question through, it was when we had strategic sessions with our group. It was, what is our real job? Life insurance, what is our real job? And in fact, it is to protect every person around us, and it includes vulnerable persons. So Just, can you please change the slides, because how can I get to the next slide?
It has been changed. Can you see it? You need to go back a couple of slides.
No, we can see it, but anyway, I have it. I have it on my eyes. So how we did it? The question we've asked to ourselves through this strategic process reflection was the real beginning of. Sorry? Sorry? Okay. Anyway, so this question we asked ourselves during our strategic process reflection was the beginning of our change management process. Thank you. The first thing we did to go through this change management process was to make an extended diagnosis phase. It was a real necessity for us to determine where we stand now precisely through all our processes: sales, marketing, technology, actuary, staff, organization. So we did it to really determine where we were, and then we tried to define our desired future. So that's the first thing we did. Second, and it was the opportunity for us to define the vision, to define a clear vision of what we wanted to do. Second point, which was critical in our pattern, was to have how can I say this? Was to have the top management really a strong implication of our top management, from the CEO, me as a CEO, our CFO, and on this basis, we tried to implement strong internal communications. As for example, we changed our language. The word change became improvement or evolution. We launched our internal paper to explain this desired future to all the staff. We implemented town halls and regular roundtables to communicate all around us. Third pillar we implemented is the methodology. And it's probably the most important thing we implemented. We settled a project management team to first isolate the reflection about change and how we will have to do it. And this project management team is almost like a small startup in the company, and this methodology allows us to go through a continuous learning process. And the strong methodology we implemented through this team management process, we really think it's the best way to maintain the journey on the right framework. So this is the first thing, the three first things we did to develop our change management process. Then, next slide, please. Then we went through three fundamental shifts. Can we go to the next slide, please, Yus? Used?
Yeah,
is it possible, please, to go to the next slide?
Yeah, we're on the slide with the three ships.
Okay. Okay, so because I can't see it on my screen, sorry. So we went, the second thing is that we went through three fundamental shifts. Indeed, traditional insurance companies are often product-centric, and we shifted progressively through a customer centricity approach, and for that we need many studies, pace analyze it through ILO tools, we created in our organization a marketing team. We went through market search, focus group discussions, and so that we were able to build some prototypes of products to test them before launching them on the market. This is the first thing we did. The second was to shift from distribution relationships with our partners to a true strategic approach with them. So to do that, we first had to understand the business model and the challenges of our partners, and even what they think about insurance and what can insurance, how can insurance help them in developing their business. We also decided to work with our partners on the whole value channel of insurance, from the product development to the payment of the claims. And we tried to define how we could work together on all this value channel. The third shift we made was to go from a technical process oriented to a customer experience oriented activity. And for that we used some tools. You probably know the customer journey mapping from the CGAP. We started to rationalize our procedures, and we are moving progressively our gravity center in the organization from the technical part, production, subscription, claims, and so on, to marketing, sales, and customer care, to adapt the organization to this customer experience orientation. So these are the three shifts we are going through now to implement our change management. And all of these are implemented by the project management team for the moment. And what we've learned through, what are the main lessons learned for us in this journey? Next slide, please. The first lesson we've learned is that implementing is probably the moment of truth, because since approximately 10 months, we went through two different phases. The first one was the diagnosis we just talked about a bit before. And then we had a phase of conception. We worked on our products. We worked on our products, we worked on our procedures, we worked on our customer journey mapping. It was just conception of tools. Now we are going through the implementation phases, and we have to define some KPIs to follow the implementation. We have to test in live, I want to say, the process we've designed before. And the question we have to answer now is how to integrate this totally different approach of our job in the business as usual. So this is, for us, implementation is really the moment of truth. The second lesson we've learned is that we have now to convince the whole staff, because if not, it will probably be a deal breaker. So we are starting from our core team, our core management team, and we are trying progressively to include what we can call a peripheral team with integrate some directors of the organization. And we are trying now to communicate on small successes to bring tangibility to the whole staff. And on a third part, we'll probably have to communicate a bit more to the whole staff. And it's only because we will be able to convince everyone that our change will be permanent. The third lesson we've learned is that we need to build capacity. We need to build capacity internally. Change must be supported by strong training, and for that, with the HR department, we are starting to work on a real training pattern for all the functions in the organizations. We first started to redefine the job, and with the whole staff, with the directors, with all the managers, and now we are working on the organization first, and then on the training we have to implement to build capacities internally to go through the change management. And the most important thing, probably, we've learned through these 3 lessons, is that agility is probably the key concept for us, because as it is a new way of working in insurance, in the insurance industry, we are learning strictly every day. So we have to be able to adapt our methodology with, let's say, almost every day. So this transfer of agility is probably the key to implement a successful management change process. Thank you, everyone.
Fantastic. Thank you, Gildas, for sharing those insights. Now we have a few minutes left, so let's go quickly to the Q&A session so that at least we can get some of the questions answered. So Paul, perhaps I can start with a question for you. It's always good to talk about change and buy-in and convincing staff, and internal champions. But how do you face someone who is resisting change, who refuses to change?
Okay. Yes, thank you, Aparna. I think, first of all, to put it in context, I think change management is a process, and you can't expect everybody to be on board initially. So it's about getting a call, like Gildas said, and then as you get successes, you communicate these successes and you see others coming in. Now, in some cases, you get those who really seem to be resisting. And the point I would like to say here is that resistance is a mechanism of self-preservation. So this individual would be having a fear or threat that they see coming out of these changes. So I would be addressing or trying to understand what those fears are and target a communication that actually makes them more comfortable with the changes. I don't think anyone resists change just for the sake of it. There's something that's holding them back and something that touches them closely. So it's more about self-preservation. And like I said, coaching usually helps. If this is a critical person within the organization that you need to actually address, coaching actually helps them to see things differently and maybe see things less of a threat. But I think what happens with resistors usually, as the successes keep growing, they actually do come on board. But I would say directly to your question is that one needs to address why a person is resisting the change. There's something they are fearing or something they want to protect themselves from. And the manager or the people driving the change, it's important that they start to understand that and find ways of communicating a different message to these individuals. Thank you.
Okay. Thank you, Paul. So my next question is for Solape. Just a second. So for the products that are perhaps already in the market, or the ones that you're planning to launch, especially the voluntary products, what is the penetration rate that you're currently experiencing, or what is the penetration rate that you hope to achieve with the new products? These are the products specifically with the microfinance banks.
Okay. All right. Thank you, Aparna, for the question. For the penetration rate, let me answer that by saying that what we're doing in our targeting of the microfinance banks is that first, the partnership team, or the team that has the task of partnering with microfinance banks, what we've done together is identified microfinance banks at different levels. So there are ones with a very big customer base, over 10,000, while there are some with very limited customer base. One of the things we've looked at is between a 5 to 10%, and that for now it is still our target. We haven't had we have just one product so far, so we haven't been able to measure ourselves explicitly in meeting this target. But what we've looked at is, if given the opportunity to prove our services, if where people finally get to the end of the product and claim and see the benefit of this cover to them, I think we will have a better improvement. But for start, it's still between a 5% for now, which we believe that between now and a couple of years we can take that figure up.
Okay, thank you. Gildas, I have two questions for you, so perhaps I can ask them together and you can respond one by one. The first one is, in terms of any changes that are required, making changes requires the use of resources. So at SUNU, when you are planning, which change to implement, do you create financial projections for these changes to convince your board or shareholders? So that's the first question. And the second question is, can you give some examples of quick wins that were used or that you plan to use to convince both your inner and outer circles?
Okay, thank you, Aparna. About the first question, as we said, we in September and October 2016, we defined a strategic plan for the next 3 years, and indeed we made some financial projection to show to our board management and to our group the potential of the vulnerable population for us. So it helped for the board to identify the potential and the need for change. And we also made it internally to convince our directors that it was a necessity for us to change the way we work if we want to develop our activities on this market. So we made it. And about the resources, the second thing is that through the merger and takeover process, because there are financial resources, but there are human resources as well. And through this merger and takeover process, the size of the company really changed, and we were able through that to build internally a real project management team. So we have internally our project management team is 12 persons now. So we have a project management team with 12 persons who are working now since, let's say, approximately 8 months on this project. So we have the human resources, and we were able to convince our board to allow us the financial resources. Concerning the second question about the quick wins, I think the first quick wins we were able to show to the board and as well internally was some partnerships, some strong partnerships we were able to sign because we made exactly the same thing with our partners that what we did internally. We try the pitch deck we've structured to develop new partnerships was based on a real strong marketing approach. We went to meet our future partners by saying them, we will not propose you our traditional value proposal, but we want to discover the way you are working, we want to discover your needs, and then we will propose you a new way, a new partnership in which you will be totally implicated. And because of that, we've now signed, let's say, about 5 to 6 new strategic partnerships we didn't have before. So this is the first quick win we had internally.
Great, thank you. We have just time for one more question. So I'll pose it to, yeah, it's okay, Gildas. I'll pose it to all panelists. So in this, as we go through this change process, especially to serve the emerging consumers or the low income segment, what is the one big change that you foresee or that you already know that you are facing when dealing with this emerging consumer vertical as compared to your mainstream business? And Paul, maybe you can, if you have any kind of inputs from other projects that you would like to add, please feel free to do so as well. So maybe we'll start with Omosolape, Gildas, and then Paul.
Aparna, you have to repeat the question, please.
Okay, the question is, what is the one big change that you are facing now because of the need to deal with or to serve the emerging consumer versus your traditional mainstream business?
Okay, I think for us it might be regulatory for us. We find that regulation will need to catch up in this regard, and there are, as much as they are thinking of this customer, I think they might be slowing down the process. What we mean by that is that in trying to learn and understand, how focus and what we're trying to, do in terms of product creation, we see a little bit gap in them trying to, understand and be sure that the customer is taken care of, or the customer is protected. So we think that our biggest challenge right now is regulation, and we're looking for any way in helping to build their own capacity at the same time, as much as also helping them effectively improve their turnaround time in terms of giving approval and working together with a lot of other insurance companies. That is our major challenge at the moment.
Thank you, Omosolape. Gildas, you want to add anything from SUNU's perspective?
Okay, thank you, Aparna. I think for us the main challenge, the biggest challenge now is to create trust with this population. Why to create trust? First of all, because they are first-time buyers of insurance products. Many of them are first-time buyers of insurance products. And the other reason is that to create this trust, we probably have to redefine all our internal operational processes. We have to modify our distribution process because the contact those emerging customers will have has to be in a trustable relationship with this contact. We have to modify all our technical process, production and claims administration. We also have to modify our IT support, and probably one of the most important things is that we have to modify our communication process. And so for all those reasons, I think that yes, creating real trust, strong trust with those emerging customers is really the most important challenge for us now. And as we are in the implementation phases, we really can touch it, we really can see it.
Okay. And finally, Paul, anything that you want to add here?
Yes, Aparna, from my side, we're dealing with low-income people. So definitely the margins that they're offering to the suppliers of these products are very low margins. And that's the big difference, I think, between the existing client base and these particular customers. So for me, the critical aspect around the change process is really about efficiency, so as to be able to deliver that product at the right price at the level of incomes that those customers can afford. And I think scale is going to be critical. In whatever all these institutions are trying to do, I think they have to target to achieve scale in the long run to be able to have sustainable businesses. So it's really efficiency, but actual scale also would drive that efficiency and sustainability.
Okay, thank you.
Thank you.
I think with that, we are about a few minutes over. So I would like to thank, first of all, the three panelists for really sharing your insights and your experiences. I think they're quite useful and important for other insurers who might want to embark on a similar process. And then also just for all the attendees, just, this is a series that we are launching, and we hope to share experiences from our other partners as well. So please do stay tuned for announcements for following webinars. You'll also receive a survey when you exit the webinar system. We would really appreciate it if you could take it's a very quick survey, if you could take a few minutes to provide feedback and also any suggestions that you have on how we might improve the webinar, or if you have suggestions for topics that you would like us to cover under the broad theme of managing change. So with that, I'll end the webinar and thank all three panelists again, and I hope that you will participate in future webinars as well. Thank you.